If you followed investing back in 2015, you have to remember all the rage around factor investing. Factor investing in smart beta, it was literally everywhere. You could not avoid it. It was getting shoved down your throat. It seems like by the minute there were new smart beta ETFs launching, and investor money was just rapidly pouring into these new smart beta ETFs. And just as much as there were ETFs launching, there was 10 times as many white papers flying around showing the historic performance of these certain factors and trying to explain and justify why they were going to outperform going forward. So interestingly enough, in my research this past week, I ran across this paper from 2015 by S&P Global, The Story of Factor-Based Investing. And this paper, published in 2015, has a bunch of different factors in it, along with, and this was very common at the time, a backtest showing its historical performance. And I say it was very common at the time. It still is very common. It just seems like I don't run across these white papers as much as I did in 2015 and 2016. But the practice of showing backtests of historical performance is incredibly common. That's not going anywhere. But anyways, this paper has a bunch of those backtests in it for basically all factors showing the outperformance. Like, I think we'll see the value one here. Oh, nope. It doesn't show a backtest for value, but it does show one here for the dividend aristocrats. Look at that outperformance over the S&P 500. What's next? Momentum. They show momentum using the S&P Europe 350. Damn, outperforming the market cap weighted by a long shot. What's next? The quality factor. And wow, I mean, look at this. You would be a fool if you didn't invest in the quality factor. I mean, it's outperformed it on a total return basis here by like 2.2x. The volatility is less. Why wouldn't you invest in the quality factor ETF? So, what I wanted to do was take a look at these factors that are covered in this paper here and show this nice backtest and show how they've performed going forward since this paper was published in February 2015. Because subsequently, since then, there's basically been an ETF issued or created, launched, issued, whatever you want to say. There's an ETF now that represents all of these underlying factors for the S&P 500, which I'm guessing is what they're primarily comparing to in this research paper, considering this paper is by S&P Global. So I have gone ahead and put the S&P 500 up on the chart and set it back, we'll just set it back 10 years here and start putting the representative ETFs on it, starting with the value factor. Now, some of these ETFs aren't going to go back to February 2015, but we're going to go back as close to that as we can get, and we should be able to get we should be able to get to a starting point of some point in February and just look at the performance of how they've performed since these ETFs were launched. Whereas the backtests show they did good historically, let's see how they're performing going forward now that we're basically almost 7 years out of sample. Starting with the value factor, we can use the iShares S&P 500 value factor ETF IVE. We will put that on the chart here. Morningstar chart going slow as always. And we can see over the last 10 years, the value factor has certainly been on a pain train, underperforming the S&P 500. The next one is the dividends aristocrats. And what's cool here is we have got the backtest chart where we can see it performing incredibly well historically. There is a dividend aristocrat ETF. Its ticker symbol is NOBL. And let's put it on here. Now, we're probably going to have to adjust the chart and the timeline to actually get it, to a starting date at the beginning. But let's put it on the chart, and I think this one was launched like 2013 or 14. So we'll just keep adjusting the chart, until we get to a date. Actually, you know what? We can put it, let's just do this right now and put the chart on 2015 February. And if we have to move it forward, we can. There we go. So dividend aristocrat strategy, also not outperforming, and I'd just say radically underperforming. Maybe not radically, but pretty solidly underperforming market cap weighting S&P 500, not continuing the trend of its backtest. Momentum. For momentum, there is an S&P Momentum Fund. I think its ticker symbol is SPMO. Here we go, S&P 500 momentum. All right, so momentum as a factor has slightly outperformed. This is not the rip-roaring outperformance you see in backtest, but it has slightly outperformed the S&P 500 over this time period. What's next? Yeah, for the momentum backtest here, they use the Europe 350, so we really can't compare that. We're strictly looking at the S&P 500. Quality factor. Now I always loved the quality factor. I remember looking at the quality factor back in 2015, like, damn, this looks really good. Because it's low volatility relatively, minimal drawdown or lower drawdown on a percentage basis than S&P 500, and strong outperformance. There's the S&P 500 high quality factor, SPHQ. We can pop that onto the chart. And it has underperformed. Has it underperformed? It's actually outperformed by a hair. Okay, so it's basically performed about the same. And what's next? Size. And I think here they use the small cap 600. So the small cap 600 ticker symbol is VIOO. And interestingly enough, what did they compare it to? Oh, versus the S&P 500. Okay. VIOO, the small cap index, not even coming close to being on par with the S&P 500. So that small factor ain't quite doing its thing. Now, interestingly though, since I've been talking a lot about equal weight ETFs, we can stick RSP on there, which theoretically might benefit from small cap exposure. And that has also not outperformed the S&P 500, but rather underperformed it. We'll remove RSP because we still got to get more of them on here. Corporate finance share repurchases. Okay, so this is buybacks. And yeah, companies that buy back their stock have done incredibly well historically. I mean, wow, look at that outperformance. That's literally like 3xing it. Yeah, basically about 3xing it. 3xing the S&P 500. There was a S&P buyback ETF, but I think that ETF closed. So now we can just look at the PKW, which is Buyback Achievers. And that one is also underperforming the S&P 500. Then there's volatility. What else do we have in here? And that is it. Okay. Yeah, so on this chart, we need to make room for one more. Which one are we going to get rid of? I guess we'll just get rid of momentum. That's the one that slightly outperformed it, so we'll remember that. And then go SPLV, which is the S&P 500 low vol. And again, that is really underperforming the S&P 500 over this 7-year time period here, about 7-year time period. Actually, yeah, it's 7 years already. Gosh, damn, time flies. Anyways, S&P 500 low vol underperforming. What's interesting about the S&P 500 low vol is when we had our little COVID dip, the S&P 500 low vol, I think, dipped more than market beta. I mean, we saw the low volatility stocks at that time become the high drawdown stocks, right? Because historically, the low vol stocks have been companies like your utilities and companies that have a lot of tangible assets, like railroad companies. The companies that just have a lot of physical, real world, tangible assets. They had historically been low vol, but during COVID, when things started shutting down, they suddenly became the high volatility and high downside stocks. That's just an anecdote there to kind of remind you and remind myself that markets are unpredictable, right? Like no two crashes are the same. No two markets are the same. No two bear markets are the same. No two bull markets are the same. Everything changes wildly. So in looking at this here, right, and we see this data which shows outperformance in all of these factors in this paper by a strong margin. Going forward in the future, out of sample, none of them have really performed very well. Momentum outperforms a little bit. Quality has basically done about the same. That's the green line there, really not doing anything different. Looks like it's generally underperforming the S&P 500, except for at the moment with the recent volatility, it is still outperforming it. And other factors just grossly underperforming the S&P 500. I find this very interesting. I mean, I kind of had an idea this was coming because I follow investing closely enough, but this really drives home the point that a few points, and that is that it's very difficult to beat market cap weighting, even with quantitative factor investing approaches. B, just because you see a backtest of something that has performed well historically, it doesn't mean that it's likely to outperform going forward. You could probably make the argument that if you see a good backtest, it is statistically significant. And this would be cool to do the research on it, but it'd be damn near impossible because there's so many backtests. But you can make the argument that because you see a good backtest, it is significantly significant. It is statistically significantly likely. I'm not sure if I'm saying that right, but it is likely statistically significant that it's not going to outperform going forward. Basically, what I'm saying is that if a backtest looks good, it's going to underperform the market going forward. Maybe. I mean, I'm not, obviously haven't done the numbers on it and crunched the data and ran the numbers on that, but that's damn near the way it seems. When you see these good-looking backtests going forward, they tend to underperform. And as we can see here, since the rage of factor investing in 2015 and all kinds of white papers like that, factor investing has really underperformed the market. So what do you guys think about factor investing? Did you jump into any factor investing ETFs back in 2015? I'll let you know that I did too. One was value, one was momentum. I'm not going to tell you which two they are, but by and large, if I equal weighted them and rebalanced them quarterly or even annually, which has basically been my strategy, they are underperforming the S&P 500. So that's a wrap on this one, guys. Thanks for taking a look at factor investing and its performance since it was all the rage in 2015 with me. I am signing off on it.